Welcome everyone. So this is my very first podcast. It's very rough. It's not intended to be super polished for this particular episode. There's not a lot of content out there with regards to chatting to traders. And there's a lot of topics that I think are of great interest. So for those of you who don't know me, my name is Adam Harris. I am based in the city of London. I'm a day trader. I manage my own stocks portfolio. I also day trade a variety of other markets. I think the expression would be I go where the action is. I do a variety of, I'm also the chief market analyst with FOREX Fox. I'm also an ambassador with FX Globe, and I'm very proud to be a part of the Trade with Precision team. So I provide market analysis for a variety of brokerages around the world. And so I've been kind of taking the dogs for a walk. So kind of based in South London, taking the dogs for a walk, and I'm very late to the game, have discovered podcasts. And there's a couple that I've really enjoyed. And there are some out there that are very good. And it's one of those things where you don't really know that you're going to enjoy something until you do it. And then of course it's which podcast do I listen to next? It's very tricky. Well, for me anyway. But while I was doing this, at the same time for FX Globe, I've been learning a lot about the history of money. So doing specific videos where I talk about the history of money in the markets and how institutions came to be. And then I did a trip in November to New York, and we were staying in 110 Wall Street, which is now, because of post-pandemic, they're converting office blocks into sort of apartments, and it's a great idea. So people are sort of moving back into the cities, or there's opportunities there. It's affordable, it's got a great vibe. And what's interesting about 110, which I didn't know until much later, is that 110 is one of the offices where Bernie Madoff was kind of building his crooked empire, and it was in that very building. And it's right down at the bottom of Wall Street. You go a little bit further, you cross over there's sort of a busy road there, you cross over, you're on the water's edge. But also, if you just go up one block and just look in, there's this beautiful, iconic building which is used as the Intercontinental Hotel in the John Wick films. But I didn't realize that is the kind of Cocoa Exchange, the New York Cocoa Exchange. So this sort of started the whole journey of discovering the history of how the markets came about. And I'm definitely going to be talking about that in episodes. I think that there's a variety of topics that can be covered and discussed in a podcast that would be of interest even if we don't really think so. It also changes the way we look at the markets, and I think that's really crucial. It's very important to have a very healthy mindset towards the markets, in the same way that you have to have a healthy mindset towards your personal relationships. If you don't, your personal relationships are going to fail. So you need to have a healthy mindset towards your relationship with the markets as well. It's a crucial thing. How you think about it. If you're very paranoid, if you're convinced the market's out to get you, or your broker's out to get you, your trading starts to become a whole sort of game of cat and mouse, and it's completely you in your own world playing cat and mouse. There isn't anything else on the other side. Not saying that I haven't seen some dodgy stuff in my life, but for the most part, especially these days, it's possibly one of the best times. So I'm recording this in January 2023. The last few years have just got progressively crazier as we get more and more people on the planet. There's just too many of us sort of rubbing shoulders, and there's a lot going on, and there's just constant access through social media, and there's good and bad. So it's kind of, it's almost like being an adult and having access to the sweets cupboard, where now you can eat all you want, but at the same time you do have to decide, do I want to do that, or do I need to portion control it? So the idea with these podcasts is there's a range of topics I want to talk about. And I realize that some people are just going to be listening to the podcast, and some people might be watching them as well. So I'm going to try to make sure that there's always a video version available if it happens to be a visually heavy topic, because what we do is actually a visual activity. We're looking at the markets. But at the same time, there's a lot behind it. There's trading psychology. We could be talking about different platforms, different techniques. And also, I really want to interview other traders. I want to interview people at the beginning of their journey, people who've been doing this for 20, 30 years. I'd love to speak to Larry Williams, Mark Douglas, unfortunately passed away a few years ago, but somebody, an author of a great book, Jack Schwager. I'd really like to get people like them into a session and include them into a podcast. So I'm sort of building the structure as I go. I have broad ideas of the different types of topics that I would like to include. Now, I also do mentoring. I'm very lucky. I only mentor 4 or 5 people a year, really not a lot. So if you are one of my mentees, you really are one of, like currently, then you're one of a very few number of people. So I don't want them to be too long. I want this to be long enough that if you're enjoying it, you can listen to it. But I'm also extremely conscious that it's my voice and it's me, and this isn't about me at all. I'm very aware of that. I don't want this to be a platform for me. I'm not trying to gain followers. I just think that it would be cool to have a podcast and it doesn't look like anyone's necessarily doing the ones that I want. So I'm going to sort of start that journey. So a couple of things that I just kind of wrote down that I wanted to talk about. The charts are in front of me. It's not a big deal. The US markets are going to open over the next sort of 40 minutes, and I'm curious to see how the market's going to react to that. So I've just put up kind of a chart in the background that's going to be there while I'm having a look at a few things. So I want to kind of, I'm just having a look at gold at the moment, just to see how that market is responding to stuff. I'll just switch this up to a daily. This isn't part of the topic. This is just something that I want in the background. And let's kind of pick up, say, Apple, or let's have a look at, say, Tesla, just to kind of see how it responds when the market opens. And so right now it's kind of looking a little bit bullish, but there's some bearish divergence. We'll get to that. I can talk about the markets, the charts forever. Okay, so the idea of the podcast series here is to provide a series of topics that newer traders definitely want to hear about, stuff they should know about, and stuff that they're interested in, things that ideally would make a difference. And then secondly, there would be sort of more experienced traders who might just find this very interesting. There's not much else you can do. As you become more and more experienced, it becomes a very solo activity. So you end up working by yourself often, from home, for example, and you don't have anyone to talk to. So it becomes quite lonely. Usually when you start out, if you attend a course, there might be 20, 30 other people in the room, or if you're doing it online, there's a forum or a chat group, and it's really busy. And then it sort of peters out as some people get bored, some people get too frustrated, or people just kind of move and their lives change. So life gets in the way. And again, one of those things I want to talk about is what type of education should we be looking for? And there's a lot. I think that there's almost an unlimited number of topics that we could talk about that would be valuable here. So I work in my office, which is a home office at the bottom of the garden, and my fiance sits to my left. She's not here most days, and so it's pretty much mine. And then there's a bit of a gym behind the screen here, and then the garden. And then some of the doors are open, and in winter everything's closed, and there's a skylight here. So just kind of working off that. And I have 2 screens. So I went through a phase where I wanted to have a very kind of Spartan minimalist lifestyle. My logic was that I didn't want trading to overrun my life. I wanted to live a normal life, and trading has its place. It's a source of income. And because it's very easy to get caught up in the hype and the excitement. And make no mistake, there's always someone who wants to sell you something, and there's always someone who wants to sell you, whether it's kit or a strategy or an indicator, there's always something. And actually, it's really hard to find the genuine real world experiences. And this is something that one of the things that I love, my connection with people that have been in the industry, other traders that are learning that I've kept in touch with for years. They know me because I'm always trying to represent what it is that we kind of do. And retail traders, such as ourselves, we have a very specific type of way of trading. And there are some great content providers out there. There are some astounding content providers out there. And actually, that's something that I would love to do, is to get a couple of people in. There's one particular trader that I'm a big fan of. His name is Rox. I'd love to get him in for a talk and a chat. He's a phenomenal price action trader. So I think today there's more choice in terms of way to build your skills than there was when I got started in 2009. So I'll give you a little bit of a history about it because I think the story is relevant. So that's kind of the first thing on my list of, not a lot of things to talk about. I want to keep this to about 30 minutes and we'll take it from there. And you can give me feedback. Is this too long? I found that part interesting. Can you talk about that? Or I like that topic. I want to hear more about that. So if you give me that kind of feedback, I'll build stuff up on it. So let me tell you, I guess, my story. So I am now 48 years old. And I really only, this is my second career. So when I was 19, I watched Jurassic Park. I saw that come out, and I was like, I had already been intending to go into special effects in the movie business, but then I realized I want to get into the computer graphics side of it. And about 2 years later, I was already actually working for a company. I grew up in Cape Town, and I managed to connect with a computer company that most people probably don't know about. Some people will, but most people don't. But back in the 90s and 80s and very early 2000s, actually probably by the end of that, there was a massive computer company. There was Sun Microsystems, but the big one was Silicon Graphics. And Silicon Graphics provided all these beast computers that were super, super expensive to the visual effects houses to do the special effects, the computer graphics for the movies. And I ended up actually ultimately working for them, and specifically a subsidiary of theirs called Alias Wavefront. And that was really good. I wormed my way in. I was very, because I was so keen, I was intuitively talented with it. And then I subsequently started up a company in South Africa, in Johannesburg, which was a post-production company. And it was a specialist, very sort of niche kind of company where we wanted to do visual effects, the kind of stuff we were seeing in the movies in the US. We wanted to do that for stuff in South Africa. Unfortunately, that industry in South Africa did not grow at the same pace as it did in the US. And so my career path kind of just got stuck in that company. We did some great stuff and I loved it, but we worked long hours. We didn't get paid very well. And there were very few of us. So it was almost like there were like 3 very specialized companies and then 2 behemoth companies that got a lot of the film editing and grading work, and massive movies would come out to South Africa, get filmed, and then they would just take all that post-production work back to the US. And this is all in the 90s. And it has obviously changed since then, but so I kind of reached the point where the competitiveness, now all of a sudden when I started, there were 2,000 people in the world doing this. And by about 2007, 2008, there were probably 20 million people doing it. The whole industry had sort of been born and grown old and matured just at that time. It was just ridiculously competitive. And I was very frustrated. So I sold my shares in my company, and I sold my property in South Africa, and I got divorced. The divorce is relevant because I had created a gilded cage. This is a gilded cage scenario where in many ways, my life, there was nothing wrong with my life. I had my ex-wife was a great person. She's kind, she was super smart, super talented. I had a business with my best friend, loved some of the projects we did. But it wasn't right. It wasn't what I was looking for. And there we go. I just sort of paused the recording while I restarted it and everything. So but I wasn't actually satisfied. And what I had done is I had sort of created a life that also suited people around me as well. So, it's tricky to describe, but I realized that I didn't, that I wanted to get divorced. And then I had also decided to qualify as a project management professional. Now, although we have lots of project managers around, if you commit to something like the PMP, which is the Project Management Professional Program, that's like a mini MBA. It's incredibly intense. And I decided to do that. And while I was doing that, I was actually picking up business skills, which I lacked because I was a starving artist. I'd created this company that did great stuff, but it was a crappy business. It was a shitty business. And did it have potential? You know what? If we had been in almost any other country outside of South Africa, we would have had amazing growth opportunities. We would have worked on great projects and we would have built up. Absolutely no doubt about it. The talent was there, it was just in the wrong location. And there was just not enough work for that. It was just so small. And there were some there's still some great companies there. But for me, I just reached the point where I didn't like what I was doing at all. I was burning out. I couldn't go on holiday because I wouldn't be earning money. I had an empty bucket every month that I had to fill. And then, when I worked, I couldn't take time off. So my life was very unpredictable and I was not happy. And it was a hard realization to come to, but as I was doing the project management qualification, I was developing skills that in theory at that time would have got me a really good paycheck almost anywhere in the world. And so I started to look at my my job differently. What it was a passion that, that wasn't didn't pay well, and you have to separate what you do and where your income comes from. This is what I learned the hard way. How you make your money and what you do don't always have to be the same thing. And I think that anyone who tells me, look, people who say, there's a famous saying that if you love what you do, if you love your job and you love what you do, you'll never work a day in your life. And that's true. But statistically, in terms of probability and experience talking, for every single person to be able to do the job they love and make lots of money from it, it doesn't tend to happen. So it wasn't going to happen the way I was. And I'd already kind of spent most of my 20s, my early 30s doing it. I just didn't want to get started again. But what I had been doing was I've been reading a lot of books. So lots and lots of books, corporate books, strategy books, The Hedgehog Principle, From Good to Great, The Google Story, like everything I could get my hands on. Even was pinching other people's MBA books and working through the MBA course. I realized that actually I was free to develop skills in any area that I wanted to do. Anything I could just learn, I would just go back and do it. And I wanted to improve my financial knowledge skills, my financial area. I wanted to build up on those skills. And so I made the decision. I was like, okay, well, which areas aren't limited by where you live, and which areas aren't limited by where there's no ceiling on your income. So somebody else doesn't get to decide how much you earn, because in the company that I was, we depended on advertising agencies to get the jobs. And then and they determined the budgets as well. And so I didn't want to be in that situation again. And I did a lot of soul searching and thinking and research and came up with two things. Property. So you could do property investment, which was accessible to pretty much everyone. And you could, at the time, learn how to trade stocks. So this is 2007, 2008, where I'm still in South Africa, but I'm starting to go, okay, this is something that I want to have a look at. And when you Googled it, because Google was obviously around, Chrome wasn't really there, but Google was there, it would just come up with, actually at the time, it would say, look, you also should learn how to trade FOREX. FOREX was the new thing back then. And on that note, let me just bring in a bit of history in here. The currency market, although it was officially sort of kicked off in 1973, 74, somewhere around there. I'll get the dates precise when I talk about it in more detail on a separate podcast. It didn't, that was more for big institutions. It didn't become available to individuals such as us to trade until 96 or 97. That's really not that long ago. I already had a mobile phone by then. So it's very new. The currency market is newer than we might think. So even by 2007, 2008, where I thought I would be getting into an industry that was very, very old and established, actually a lot of it was really new, including trading currencies, which is why they were pushing it everywhere. So every decade they go through something new, which is a new product that they want to encourage people to get involved with. The latest one, we went through binaries, we went through cryptocurrencies. We'll see what the next stuff is as well. And so I decided that was really what I wanted to do. I ended up selling my stuff, getting a divorce, which was incredibly stressful. Even though it was my decision, it was stressful. So for anyone going through a divorce, even if it's hard, it's a tricky thing because it's such a big commitment, and you never got into it with the intention of getting divorced. You never get married with the intention of getting divorced. So it was a toughie. And my ex didn't take it well. So I'm definitely the bad guy in that scenario. But it was for the best. I look back and it was absolutely the best decision ever. But that is my responsibility. I take responsibility for my part that I played in that. And my best friend as well, our friendship sort of fractured because I was a little bit further on my journey and I realized that my future wasn't in that industry and he wasn't there at all. He loved what he was doing and he didn't want to go. And so we also kind of, that friendship, there's a gap between us now because I kind of left. And I was so careful to try to not make that get worse, but it didn't help. Anyway, I arrived, got to the UK. I had a bit of cash with me. I think I'd sold my properties and I had about £50,000. And I was trying to, and actually that took me about 18 months to get all that stuff across here. I worked in the oil industry actually for about 9 months. No, actually more, 9 or 10 months. in Aberdeen. I have family there, so that was great. It was a great experience. I was using my project management skills, and I was gaining business experience, corporate business experience. It was fantastic. I loved it. Then I came down to London, and when I was here, I had a little bit of cash, and I was doing some teaching actually at one of the college studios in London. Excuse me, and it was amazing because it was a relaxed daily curriculum. The pay was decent, and it was flexible. So then I decided to sign up for a course. And as it happens, and it's tricky because I don't know if I want to talk about it now, but as it happens, I got a little card that came through the post. This is how the universe works. Without being overly religious, I'm just saying it's funny. It's like now when you say, oh, I'm wondering about going on holiday, and all of a sudden all your social media stuff starts putting holiday stuff, you know what I'm talking about, starts putting that stuff in front of you. But the card came through, do you want to go attend a free seminar? So I'm not going to mention any names, but if you know, you know. So I went to one of these seminars, and it was a hard sell, very hard sell. But here's the thing. I already knew that I wanted to, this is important, I already knew that I wanted to learn how to do this. So my only question was how was the course? And I thought to myself, you know what, if it isn't, I'm going to do this. So if the course is either good or it's crap, and if it's crap, I'll do another course. So that isn't necessarily the same route everyone else goes. I was looking for this. So I joined the course, and of course on day 1 or day 2, back then they did it in day 2, there was this heavy upsell to get people to commit to like a year-long program for a lot of money. It's like half the money I had. And I decided to do it. But again, I knew it was a hard sell. I decided to kind of go ahead and do it. And looking back, I think there was a lot of value at the time when I did this year-long program. There was stocks stuff. There was continued. There was just a whole lot of content. There was live trading days when you could do it back then. Regulation, guys and girls, ladies and gents, has changed a lot. There's so much you can't even talk about today. I can't say, oh, I want to get in at this price. I'm looking at getting out here. I can't do that according to regulation. And the purpose with these podcasts, ladies and gentlemen, is to add value. I want your experiences to get better. If there's anything I say, if there's one thing I say that makes a difference, that changes the way you think, that changes your performance in your trading, or helps you reach a decision one way or another, then I'm happy. And so so I did this program, and this is kind of an important part. I think I'll come back to this at a later stage in more detail, but this is kind of a key part. So when I did the first course, there was some strategies involved. And when I look back now, the strategies weren't bad. There was nothing really wrong with them. They were fine. In fact, you could technically still use them today. And so for what it was, I believe it was value back then. 2-3 years later, without realizing it, the sales department had got involved in the approval of the content. Somehow, in some bizarre manner, it wasn't the trading coaches who were designing and monitoring the content, the courses, the strategies. It was this like sales department upstairs, and they removed, without even realizing, and stuff they didn't think needed to be included in the books, like core stuff. And that was kind of where I realized the value was being lost because the organization had changed shape. That's fine. It happens. As in companies lose their way, right? Companies lose their way. Look at Facebook. Look at what Facebook was and look at what it is today. It's just like there's nothing there for new. If I was a new youngster, like 18, 19, 20, or I'm 15, I want to get on Facebook, I honestly would look at it now and go, why would I sign up for that? But when we got started, it was the most amazing way to connect and reconnect with people. And with kind of in generally, like your time spent on it was fun because it was the right kind of content. And then it just became a monster after that. So while I was doing this course, this is the important thing I wanted to mention. I was waiting for a moment where I would go, I've got it. I'm a trader now. Like I've got it. I've figured it out. It feels right. The clothing fits. Like I'm it. I've got it. I've nailed it. I've had the breakthrough. And it never quite came. It just wasn't quite there. Then I was like, and then you hear a lot about, well, you've got to be disciplined. You've got to stick to your plan. And when I look back now, what was missing was an actual conceptual understanding of the markets. When you get a strategy, it just describes rules that you have to tick. but it doesn't really explain to you maybe why the strategy works, in which markets it works best, in which conditions it works best, and why those conditions produce better results. You never really get that. So you don't have a broader, well, I didn't get a broader understanding of like what it was. I just didn't get it. But I worked with some really good people. So despite what I was disparaging stuff about this stuff, I met some great people, and bad companies can get great people working for them. They get loyal people, kind people, nice people working for them. It happens. So I'm glad that I went on that journey, but I knew that it was a stepping stone for me, and I was kind of going to pass through on that. So I was going through the stuff, I was mastering the strategies, but I still never got to a point where I was like, I completely understand what I'm doing here. This is important because I'm going to tell you what happened that got me to a place where I knew what I was doing. And if this is something that you can relate to, let me know, because this is something that I want for people. So if you are over in a situation where you feel like you're going through the motions and you feel like you're doing everything you're supposed to be doing, but it isn't clicking. It's the why you're doing it, or that it doesn't feel like, okay, I've got it now. So for example, if you're learning to play a musical instrument, which I can't do, by the way, yeah, you could be plinking strings and copying and learning by copying imitation how to play a song. You know, that's possible, but you're not feeling it. It's not, you're like, okay, well, once I do that, where do I go? I couldn't compose my own stuff. I'd be lost without it, you know. And so with trading, it was very much like that. I was like, and I thought that maybe it would just happen. So at some point, you would very slowly look back and realize that you've found your way and you got what you were doing. But it never quite came. So the key moment that happened was we used to get these live trading days, and they would sometimes have outside people come in and speak. And this one day, they had this one guy come in. He's a futures trader. So his way of doing stuff was to trade the same instruments, like the euro or the S&P or whatever, but he was trading the futures market. So the reason he traded the futures market back then was the contract size. So to give you some history, I'm going back to 2009, 2010. The spreads were higher. Euro dollar was 1.5 to 2.7. Big spreads. Sterling cable on my one account was 6 pips spread. Pound Kiwi was 12 pips. Like, it was just insane. Your swaps were higher, your fees were higher, your commissions were higher, spreads were crazy. And so this chap, also a good guy, had discovered that he had a large enough account. So if he just traded futures contracts, he would just pay a fixed fee for that contract. But it only worked if you had like 100,000 or 200,000 in your account, because as a proportion of your, as a cost of your fee. So let's say he was paying $10 or £10 a trade, at $100,000, that's actually not a big deal. Whereas if you were paying spreads, he might have been paying, at the time, maybe $80 a trade or something like that. When I say bucks, I just mean cash, moolah. So that actually made sense. But he also had a very interesting quirk. Every trader has their own quirks and their own limitations, their own psychological limitations. So there's a story I remember, it's an analogy, but it's probably based on actual fact. I believe in some countries where they used to use elephants either for farming or for tourism or whatever, they would have the baby elephant tied to a chair with like a chain or something like that. And then as it got older, they would just replace it, or it was a donkey, but there was a thing, and it would be tied to this chair, and eventually they could just tie it with a piece of string to anything, and the donkey or the animal would never think that it could break the bond, because it couldn't do it when it was younger. Now it was bound psychologically. It just never questioned that it could break this piece of string and just move away. And so we have those limitations. We have those same sort of limitations. I also read a lot of books that made me more self-aware, that changed the way I think about stuff. So the way that my brain works now it's been broken to a degree. It's largely free form. Our brain has a tendency to settle like concrete into fixed ways of thinking. It will always do that. And as we get older, it gets even more that way. Because as we get older and we've survived and we lived on the planet longer, our brain naturally thinks that we are entitled to believe what we believe because we've earned it, because we've survived. Therefore, our way of doing things must, even if this is unconscious, our way of things must be the right way to do things. It must be, because, well, otherwise I wouldn't be here. And that's a big part of also when we get into the topic of being right or wrong in trades, we need to understand that being right, the need to be right, is an evolutionary requirement. It means that if we're right, we are survivors. Okay, if we're wrong, we're not going to live very long. So we always believe that if we're constantly wrong, we're going to die out, because that we can't be a good species or a good survivor. And that's not really how it works. Okay, we'll get to that as a separate topic, but I'm just trying to explain where our instinct to resist change and to be right about stuff, or to believe that we're right about stuff, is tied to evolution and tied to a whole lot of other stuff, not just cultural or sexist stuff, or sexual stereotypes. But so let's go back to this. So he would do these trades, and he would risk, and he had a target. So he had a target where he would hit, I think it was 1,500 a day. And if he hit that, he was done. And I remember him saying that if he tried to beat it, if he tried to do 2,000, if he tried to do 2,000 in a day, I'm stiff and I moved, and then I got this twinge of pain from being stiff, from working out, from training. Anyway, so he said, look, if he tried to do more than that, invariably it was a losing day for him. So it's like he overreached. So he had found his own limit. He was like, listen, if I just aim for the $1,500 or 1,500 pounds a day, I hit that with ease and I'm done. That was his personal limitation. And I remember the last time I saw him, he was trying to break out of that, but that was it. So, because what's going to happen very quickly at that rate of 1,500 a day, within about 2 years, your accounts can have grown so much that you're doing it a disfavor by not trading larger sizes. Okay, and that's another topic we need to talk about, is what is your actual limit on an account size? What is the most you can actually trade for real in a real brokerage account? I need to talk to you guys about A booking, B booking. We need to talk about order flow. There's a whole lot of stuff that are little things that you might not even realize you do want to know. You're just not there yet. So that was the first thing, was his self-imposed upper limitation, ceiling on his trading. And then he said something one day. So he was chatting, and you know what? It was the beauty of this program was back then was that everyone was sharing everything they found. So someone read a good book on trading psychology or anything, we were all sharing it. And he said, listen, if you guys, have any of you guys heard of Nick McDonald? Have you ever heard of Trade with Precision or Nick McDonald? So no, we haven't heard of them. So he said, listen, he does a newsletter for an exchange. So in London, there's the London Stock Exchange, there's the FTSE Exchange. In New York, you've got the NASDAQ, you've got the S&P. There's also an exchange called the ICE Exchange, the Intercontinental Exchange. They do large commodities, futures and stuff like that. They also do the Russell 2000. There's a few other things there. So this company, ICE, had got Nick McDonald from his company, Trade with Precision, to produce a weekly market analysis video. So you would subscribe to the newsletter. You got it every Sunday night, which for him in New Zealand, Monday morning. And it was like 3 minutes on each one. So he had 2 videos. He would do one on the global indices, the global markets, which was the US indices and some of the other indices like the Nikkei and the Hang Seng and Australia's ASX. And obviously all US and the FTSE and so on. And then he would do a 3-minute video on the dollar index. And the dollar index was the currencies, was basically currencies. And I started subscribing to this letter. So if there's one thing that you take away from today's first podcast, this is what I would really like you to take away from it. I started watching it. So I watched these videos each week, and it was purely technical analysis. To get a flavor, because I can't believe this, but I never realized I would never be able to get access to them. And so I can't even provide an example of one of them. But the style of them is, and it's not a push. The closest thing that I can think of is on my YouTube channel. So if you go through to YouTube and you look up London City Trader, or you look up Adam Harris, London City Trader, you'll see that I have these weekly videos I do, which is usually called the Master Trader Analysis, which I named it that way so that people would be able to find it. And the technical analysis approach that I use there is the closest example that I can find to Nick's style. I emulate Nick's style. So I work with Nick now. So I work as a trader and analyst with Trade with Precision, and I have since 2014. Okay. So it's on the website there. You can go and have an idea of it. So it's purely technical analysis. And this is where the breakthrough started. This is the beginning of the journey of the breakthrough. Because sometimes we don't have the breakthrough immediately. We have it, there's a delay. Okay, there the markets are going. Okay, good. The markets are dropping. All right. So I'm expecting a stronger dollar this week, so I'm expecting the markets to drop, and so I'm having a look at that. So in his videos, there's a couple of things I want you to take away from this. First of all, the dollar, the US dollar, ladies and gentlemen, at the end of World War II, 1945, the US possessed 95% of the world's wealth. And the dollar is even today, the US dollar is in 95% of all transactions on the planet. If you include crude oil, gold, commodities, and I was making a joke about cocaine because I'm pretty sure drugs are cash and it's usually a lot of dollars on that one. So the dollar is still very strong. And excluding China, and it's really interesting, when you go and have a look at the growth of China's GDP, they were nowhere in 2000. Like even in 1980, Africa had a greater GDP than China. So kudos to China for turning around, but they were nowhere in 2005. Suddenly by 2015, they're coming up behind the US and they're right up behind the US now. And they have their own problems. They've got their own property kind of stuff about to implode. They've got their own problems that they have. That's the consequence of so much growth. And growth can be tied largely, this is the way Warren Buffett would put it. I'm a big fan of Warren Buffett. Put it down to the population, and you get your kind of GDP is tied to obviously your domestic production and it's population related. So for example, if you take somewhere like Japan versus the UK, which is in a similar kind of geographic size, but the population for Japan is 100 and something million. For the UK, it's like 65, 66 million, and the GDP is proportionately bigger in Japan, but we occupy roughly the same amount of space in terms of geography. So GDP is kind of tied to the population stuff. So China's had a big population, big GDP, big growth. And I'm telling you this because, so the dollar, we have to know what's going on with the dollar. So for newer traders, they get taught trade euro dollar or get trade Bitcoin. And they're kind of, the problem is they're pursuing those markets because that's the thing they really want to be able to talk to their friends about. So it's I want to be included. It's socially driven. We are very social animals, by the way. Humans are social animals. We need to connect, even if we are, by the way, introvert. So this is most people don't believe this, but I'm an introvert. I would say I'm more of an ambivert now. So an ambivert is a mixture of introvert and extrovert. I have moments where I'm super chatty and very outgoing, and then I'm done. Like I'm gone for a while because I can't do it all the time. And I used to be incredibly shy up until I got divorced. Actually, getting divorced was the moment that I was like, ooh, I'm gonna have to make new friends and do new things. And so I have to learn to speak to people. So I've become extrovert, but who I am now is absolutely not who I was 10 years ago. And so all of this goes back to the dollar, the analysis as well. That dollar, we really do have to respect it. We have to know that it's the big cog in the system. And people who are learning to trade, whether they're going through formal education through a program or whether they're just trying to figure it out themselves, they tend to focus on certain things so they can talk to their friends about it. That's kind of a social aspect to it. They're influenced by that. And not a lot of people go, listen, you have to know what's going on with the US dollar, because if the US dollar is bullish, it doesn't matter what you think anything else is going to do. It's going to knock them out the way. So when the US dollar knows what it wants to do, if it's bullish or bearish, it will move and it will knock everything. You can kind of see in my weekly analysis, I'm looking at currencies and I'm looking at commodities, the indices and individual equities, as well as bonds, treasuries, and cryptos. You can see the movement of the money across it. You can see it. So when it's ticking up, you can immediately see the response of risk. But that isn't normal. So 2022 has been a really weird year. We had immense dollar strength. We had global uncertainty, which triggered, which was added to by Putin invading Ukraine. And I'm going to establish now, by the way, I'm pro-democracy. So I'm pro-democracy and I hate disinformation. So I'm not interested in trolls and I'm not interested in bullshit. Okay, and I make a living off trading off what's actually happening, not what people think is happening. So I'm very interested in transparency. Okay, and so I just say that because you know, we've got this invasion in Ukraine, which is absolutely insane. We live in a world where there's a lot of us, and I agree, territory and water disputes and energy disputes are part of it, I guess. But yeah, life is tougher than it should be, man. It really shouldn't be this crazy. So then what happened is Nick's analysis would focus on this. I want to wrap this part up, included in today's episode. And he was brutal. He was like, listen, that looks bearish. There's a downtrend. If the next week's candle breaks the low here, I'm expected to go from this level to this level. It's that style that I use is straight from Nick. It's influenced 100% by Nick's style, and as much as I can. So because to me, so I want to also add something in here as well. The idea of a natural trader, where this is often what goes through your mind. You think, can I really learn how to trade? Can I do it? Can it be done? I hear nothing other than that 97% of people who take it fail, which, by the way, there's an explanation for that. But the point is, I hear that. So does that mean I'm going to fail before I even get going? And so if you have any negative experiences as you go, your brain connects it to that and going, okay, I've got to be part of the 90% or whatever percent of people who fail. And that's kind of not really fair, because that's not really how it works. So let's see how Apple's doing. I want to see if Apple's broken to the downside as well. I'm shorting Apple. It doesn't matter if it goes up, I'm fine. Break even, but I am curious. Apple's nice and strong. I just saw a nice little break yesterday. I want to see what happens with it. So that's what you think. You think, can I do it? Can I? Is it possible? Then if you're lucky, you sit in on a session with a trader, and they explain to you why they're taking the trade. You watch them take the trade, and you maybe see them do that 3 or 4 times. Excuse me. And you see them do that. So you go, okay, I've witnessed it with my own eyes being done. So it can be done. But then your next thought that your devil brain comes up with is, well, maybe some people can do it, but you can't. And so this is also a false thing. Our brain works to protect us, and therefore doesn't realize it's undermining us in certain situations. So you think, okay, well, maybe some people can and I can't. Now, I'm going to jump in here and say that I believe trading is a learnable skill. I think it's actually as tricky as learning to play a musical instrument or learning to master a professional sport. Something like golf, something where you can't just casually, work your way through it. There is effort and training involved, but you can definitely get to a place where you can do it. Same with musical instruments. Or learning a foreign language. You can absolutely learn to do it. We've all done it. It can be done. People learn to do it every day. But there's definitely effort involved. And if you can go through some sort of training to help you do it, and practice and techniques and things you can do that will get you where you want to go. And that's it. I stand by that. I've never seen anything that would contradict what I've just stated there. So let's go back to these and see if I want to see if tech stocks are going to drop. Look at this nice little level. So I'm just going to bring this up so we can see it in one thing, and I'm just going to put a little bit of it. Let's just mark that as a level. And let's see if it finds support and goes above it, or if it just drops below it. Let's see. So So the dollar was a big component in it moves the market. And once I kind of what was important about this is that Nick was the only guy talking about this. And at that time, I was subscribing to Bloomberg and all kinds of different things. Nobody was talking about it from that perspective. Even when I went to a few events and I met some really big guys who have 300 million funds and so on and so forth, they weren't looking at it from that perspective. So that was a big thing. And it was so common sense. It makes so much sense that, okay. And sometimes if the dollar's not doing anything, then other markets will do their own thing. So gold might be climbing and the euro might be dropping and the pound might be climbing because the dollar's not really getting in the way. But if the dollar has decided that it needs to move, it takes priority. It is the biggest cog in the system. And when we talk about currencies, guys, you need to understand that the dollar there is tied to the dollar in gold and crude oils and equities. So there is a flow between the different markets. And when I talk about cryptocurrencies at some point, I'm going to explain how that flow of money into cryptos is now, today, some of the same money that goes into currencies, that goes into stocks portfolios all around the world. It's the same money, but big money and small money, but it's the same money. So he would do that, and then he would talk about the global markets. So he'd look at the US indices, because if the US markets have a bad day, everybody has a bad day. But if the markets have a good day, it doesn't necessarily mean that everybody else is going to have one. So it's very rare, like right now, today, January 2023, it's very unusual. Over the last few months, we've seen the FTSE, the UK FTSE, climb, and the DAX climb, German's DAX, even while the US was actually having a big correction. That's super rare. And to me, that's a really good sign of bullishness. It was really nice to see a bit of that independence come in. But make no mistake, the US is the biggest component in the whole system. So you need to have an awareness of what's going on, and you need to be aware of that. And so I started following his newsletters, because I really want to finish this for this episode, and we've been going for, where are we at? 45 minutes. And I don't want to lose you guys. This is where I saw the difference. So here's what happened. I'm busy trading in the background. So I'm watching his newsletters, and he would say, look, this week I think this is going to happen. Now I'm doing what I think everybody else is doing. I have got my forums where I'm chatting to people, and everybody else is claiming they know what's going on. And everyone else is talking about, Bloomberg is talking about what's on the news. And you've got FX Blue or FOREX Factory. You've got a whole lot of different places where there's lots of news, and everyone's talking about what they think is going to happen with the market. Now, back then it was, is Greece going to default? Is something going to happen to the euro? Is the euro going to tank? Is the US going to go into a trade war with China? So this is 2012, 2013. And so the problem was that I'd look at euro dollar, and what I heard in the news, for example, would say to me that the euro is going to tank. So I'd be shorting the market. Every time I saw any kind of a signal that looked bearish, I'd be shorting the market. And in the weekly analysis, Nick would be going, this looks really nice and bullish. I'm expecting, if it breaks above here, I'm expecting it to go to this level. And if it breaks below that, I'm expecting it to go there, but it's looking bullish. I'm leaning bullish. The beauty, because I ended up doing these videos, I actually ended up working for ICE, for Nick. And the beauty of it was, there was a lady called Barbara who was in charge of us. And she said, you pick a direction. She said, you commit to a direction. So you put your name to it, you put your balls on the line, or the expression, you put your cock on the block, and you commit to a direction. So if you think it's bullish or bearish, and you do that. And if you're wrong, but commit. And that's what he did. So he was like, listen, this is where I think, but he was actually reading it correctly. So he was like, this is where I think it's going to go. And then and so every week, it was kind of like over a whole year. So you must understand this journey. Over a whole year, I'm fighting it. It's hard for me to trust the charts. It's not that he was ignoring the news. It's that he would always prioritize what the chart was saying if it was giving clear signals. So if it was definitely bullish or definitely bearish, he would prioritize over that. If it was giving, if it looked undecided, he would say so. And he would say, look, maybe it's looking undecided because we've got, a G8 meeting coming up or something, or we're looking to wait to hear from the US what their monetary policy is going to be. But his win rate was like, as in the number of times, there was never a time where the market really kind of didn't do what he thought it was going to do or follow through, because of the way that he analyzed. And I hope to always try to emulate that and carry that across. So then it took about a year. So over a year, I'm trading effectively what I think. I have a bias in me from what I'm hearing in the news and what people are saying, and I'm trading with that. And I'm disregarding Nick's analysis. And every week, he would say, this is what I think it's going to do. And the problem is that during the week, the markets kind of swing a bit. So they can actually start out going the other way and then come back in line. So there were plenty of times when I thought, he's wrong this time. It's going my way. And it would, by the end of the week, it had always gone where he had said it was probably going to go, where it looked like it wanted to go, is the best way of saying it. So it took me a while and a lot of losses, a lot of losing trades to just let go, to just go, you know what, I'm just going to trust the charts, and I'm going to block out social media. I'm going to block out people who are creating a bias in my mind about what I should be doing and where I should be trading, and I'm going to block that out. And that journey over about a whole year, after having, listened probably for about 6 months before that, but over a year where I was now actively trading and getting myself into trouble because then I had no stop losses and I was on the wrong side of stuff. I lost quite a bit of money. Big part of that was that I just wasn't just trusting the price action, the charts, and which I decided ultimately to do. And so I decided I had to do that. And obviously at the same time, I also decided I needed to work with Nick. I needed to find a way to get into TWP. And I wanted to do that. And so I also had a bit of cash I'd saved up. So I did the Trade with Precision training program, which is not publicly available now, but back then they had like a platinum package. It wasn't ridiculous. It was something like, maybe $6,000 as opposed to like 20 something grand. It was like $6,000. It was a year-long program. And I hesitated because I'd already spent some money. Then I ended up doing it. And it was the best decision I ever made. Like I was an hour into the course and I was like, this is what it's supposed to be. So early on when I said to you that I kind of felt like, when was it going to settle in? When was that moment going to arrive when I knew this is how trading is? That actually happened when I was doing the course. So when I started the course, he basically started building up with, this is the stuff you need. You don't need anything else unless it shows that it works for you, but this stuff you need. And what happened was he would start with price action. This is where it's going, or this is what it's doing. And then you would layer stuff on top of that to actually help organize the data. And then your trades were always logical and rational. Okay, price is in an uptrend, but it's currently retracing. So I'm waiting for price to come back to this level. If it then produces, a bullish candle, for example, then I'm going to be looking for a potential buy setup. So every single trade was planned, mapped out. If the market then responded to that, which most of the time it did, not all the time, but most of the time it did. And in the times when it didn't, that just invalidated the trade. You just didn't take the trade. So that created a foundation for me, which was, holy cow, this is logical, this is rational, this makes sense to me. And that was the point where trading clicked. And I believe, and I could be wrong, I believe this should be the same for everyone else. When it makes sense to you, so in other words, when you kind of, okay, this is what the market should do, and you stand back and watch, and then the market kind of does it, you're like, holy cow, you start to disconnect from all these weird conspiracy theory beliefs we have and just bad ideas we have. And you start to focus more on the common sense stuff, that this is a market. It's made up of buy and sell orders, and people are actually doing stuff in the background. It isn't just traders. There are investors. There's people using, exchanging money, companies paying suppliers. You're ordering stuff on Amazon. Money's going to China, to factories in China, or you're sending money to loved ones across the world, and companies are paying their staff, different branches, and banks are buying and selling currencies. There's a massive market on top of which there's a layer of investment money moving, on top of which there's some trading money moving, when traders are usually piggybacking on top of the moves. So when you realize that it's actually a market that's made up of price moving from one price level to another, you start to kind of become a little bit more objective. And when you're objective, you start to not see ghosts in the shadows. Like, when you're young, or especially paranoid, and at night you start to hear sounds, you start to see things. Your brain is capable of filling in the gaps. And it's the same actually when we get to an area like trading. So once you get to a point where your brain starts to see it a little bit more clearly, and you're less emotional, your brain doesn't do as much of that kind of, did you hear that sound? Did you see that happening? And it stops making you see things that aren't there. And then after a while, you slowly start to build through experience. You build up experience. Like you build up a confidence that what you're seeing is actually what's happening. And you can still have moments. Like I still have moments where I wobble and go, why did that happen? And your brain wants to revert back to, still believing in ghosts kind of thing. But in the markets, it's really better for us to be more practical and not assume anything, really just trade it as we see it. So I wanted to talk about books that made a big difference to me, and I think I'm going to get into that in a separate one because I'm going to wrap this up. I wanted to talk about 5 kind of tips to get people, to get traders going, where to go, and what about education. So I think I'm going to wrap this up now. And for the first podcast, give me some feedback if this was kind of useful or not. I realized you heard my life story, but I wanted it to give you some color. There's a story there. And it's not really about the success of it per se. I mean, I trade consistently now, and I'm going to demonstrate that in stuff that I do, and there are examples on the channel anyway. It's more about kind of how did you go from not being a trader to being a trader, and what is it like? If I can get that and you can relate to that, you need to conceptualize. It's got to fit. It's got to make sense to you. So there's a couple of books, but first of all, like Trading in the Zone by Mark Douglas is a quintessential required reading for all new traders. You have that with you, okay? That's what you always have with you. It's a start. The reason you do this is we can't help but believe this, we believe that our experiences that we go through, especially the shitty ones, are particular to us. That, people targeted us, like as in, somebody picked on us or somebody said something to us and it was a bad experience. As you get older, especially as you hit your late 30s, 40s and go on, you start to realize experiences tend to happen similarly to most people. We have what we call universal experiences. And in trading, almost everything that happens is a universal experience. And Mark Douglas has a lot of these in the book. So when you read the book, he'll describe exactly something that you go through that you thought was unique to you. And then you'll realize that actually it's not that unique. So that's a great book to get started with, but it doesn't really help you with your skills. So I'd like to do a podcast specifically on how to improve your skills to make you a better trader. That's not psychology. That's not trading psychology. That's trading skills, so that you can read the direction the market's going in and identify setups better. But that, it's a visual thing. We're going to have to see how we get there. So let me wrap this up. Anything else that I wanted to say about education? I do think there are a lot of good educators out there. For me, and I'll leave you with this thought. For me, the biggest differences between how I intuitively knew a good educator without realizing why was when I got to Trade with Precision, they just spoke about trades. That's all they really said was, I'm looking at this trade setup. This is what I'm interested in. As opposed to other educators, which were like, we've got this new, we've got this new indicator that will find the trades for you. We've got this new instead of trying to sell the strategy. These guys were actually capable of going, yeah, this is what I'm looking for. And the reason for that is, even if I created the perfect generic diet and workout plan that would take the average person and turn them into like a superhero body, and I had copies made and threw them out on the street or posted it on the internet, that is not going to result in many people looking like that, even if they want that. It's because there is a gap between having the information in your hands and applying it for a sustained period of time, even when times get tough, to get you to become the person you have to be. And as a trader, you have to change who you are. You have to. You've got to change the way you think about things, the way you build up probabilities. And we don't do that very well with our training. So you have to learn to do that. But you can do it. You can do anything. There's nothing that, honestly, you can do anything. And if you can learn a new language, or you can learn to play a musical instrument, or you can learn to play a professional sport, you can learn to trade. And there's different styles of trading, which I'll get into. So I just want to say, key thing for me, for the educators that I follow, they will tell you why they're taking a trade. They won't have to try and sell you anything. They'll explain it, because the training isn't really in that. They've got to train you over time, over 10 trades, 50 trades, 100 trades to take those skills on. They could give you their strategy, and that doesn't mean anything. So the best kind of educational places are more focused on making sure that you understand why you're taking the trade, rather than trying to sell you stuff. And anyway, I'll think about a better explanation for that. But I'm going to leave you with this. That's my first podcast, guys. Thank you. And and so there's lots of other things. If there's a topic that you want me to research and talk about, and obviously at some point in the future, I want to get people onto the show, talk to them about that. But that's going to take a while. I'm going to need about 10 by myself, which is just my voice you're going to get stuck with. But you tell me if there's a topic you want more on, or to research or talk about, and I will. Okay, I'm going to leave you with this, but I want to say thank you very much. And let's see how this goes.